BlueScope Steel has become the latest company to be given a first strike by shareholders over its remuneration report. 39% of shares were voted against the report, which included big bonuses for executives who presided over a $1 billion loss. Andrew Robertson reports.
$1 billion loss, 1,000 jobs axed, a share price decimated and no dividend. Despite all that, shareholders going into BlueScope Steel's annual general meeting had mixed views.
I want to see a change in management itself.
I'd like to hear that there's a positive way forward for BlueScope.
The company is doing its level best, but it's a very difficult situation.
As Chairman Graham Cray led his directors in to face shareholders, he knew he was going to have to defend the company's dreadful performance, as well as the decision to pay bonuses to senior executives. The $1 billion loss was blamed on the high value of the Australian dollar, as well as the rising cost of commodities used in steelmaking. But it was BlueScope's remuneration report which really riled investors, with nearly 40% of shares voted against it. A prominent talking point at the AGM was that executives had received bonuses while shareholders had received nothing.
Shareholders have found it difficult to accept some pretty challenging targets which were met by management on the one hand and the poor share price and shareholder experience on the other.
One of those targets, which contributed to a $720,000 bonus for Chief Executive Paul O'Malley, was successful negotiations with the federal government over the impact of the carbon tax. BlueScope refused to pay bonuses 2 years ago after a much smaller loss than this year, and Mr Cray says it cost the company greatly.
We had a dozen second-level, very senior and key people in the organisation targeted by resource companies and left the organisation. And we took a view, if we were to take the same approach we took 2 years ago, we would risk a significant drain of talent at a time when the business needs that talent.
That may be true, but not all shareholders the ABC spoke to as they left the AGM shared that view.
I believe in the circumstances it shouldn't have been put up at all.
I mean, when times are bad, I think they should toe the line too.
The management are doing as best they can, with the problems they're solving, and I think they've got to be paid for the work they're doing.
Graham Cray says he'll be speaking to shareholders in coming months to try to find a compromise on executive pay. A 25% vote against BlueScope Steel's remuneration report next year will see the whole board have to stand for re-election.